Hi, this is Austin Real Estate Investing. This is Jordan Moorhead here coming to you today with Rod Khleif. He's going to tell us all about his experience investing in real estate and how he lost $50 million, came back for that, and is thriving now here today. Hey, Rod, how are you?
Good, buddy. Let's have some fun today. Looking forward to chatting with you
I'm excited.
and your Austin peeps. Yeah.
Yeah. Yeah. So, I know a lot about you. I've listened to a lot of your podcasts, a lot of your
Oh, thank
media
you.
that you do, and I know people who've spoken at your conference, but could you
Mhm.
tell our listeners who you are and how you're involved with real estate
Sure,
investing?
sure. If you've never stumbled across my stuff, then if you have, I apologize. I'll try to be as brief as I can here. But so let me tell you a little story because it ties into what I think we're going to talk about today. So I'm an immigrant. I was born in the Netherlands, wooden shoes and windmills, and immigrated when I was 6 years old with my brother Albert, my mother's Vansha. And we ended up in Denver, Colorado, and we really struggled initially. In fact, I remember eating expired food, shopping at an expired food store with my mom. I remember drinking powdered milk with our cereal in the morning, and I wore clothes from the Goodwill and the Salvation Army all the way through junior high school till I finally got a job and bought my own clothes. And you may have listeners that had it harder than I did, but I knew I wanted more than that. And luckily, my mom had an incredible work ethic. So she babysat kids so we'd have enough money to eat. And she was an entrepreneur with her babysitting money. I mean, we always had a house full of kids, but she was investing. And, with her babysitting money, she actually invested in the stock market successfully. And she also invested in real estate. And her first real estate acquisition was a house directly across the street from us from a family that we knew named the Jewels. And when I was 14, she paid about 30 grand for it. Now, when I was 17, she told me she'd made $20,000 in her sleep that had gone up in value that much. I'm like, what? You made 20 grand? You didn't do anything? Screw college. I'm getting into real estate. So I went out and got my real estate broker's license right when I turned 18, which you could do back then with education. And, now they got smart. You need some experience before you can be a broker. But I was a broker. I could have my own office and everything. Well, my first year in real estate, I made about 8 to 10 grand. My second year, maybe 10 to 12 grand. Again, this is 44 years ago. But I'm close here. But the third year, I made over $100,000. So and that back in 1980, that was pretty good money. So what happened between year 2 and year 3 that caused me to 10x my income? Well, what happened was I met a guy. I was actually dating. As a guy I went to work for. He was another broker. I was smart enough to realize I wasn't going to do my own office. I went and I was dating his daughter. And he taught me about the importance of mindset and psychology, how 80 to 90% of your success in anything is just that, your mindset and your psychology. And, fast forward to today, I've owned 2,000 houses that I've rented long-term in 3 states. I now own thousands of apartment units. In 2006, my net worth went up $17 million while I slept. And you might say, wow. And I said, wow. And I did the math on that. It's like $8,300 an hour for the year on a 40-hour work week. And of course, if you held still long enough, I told you about it. And I got a head so big that I could barely fit it through a door. I thought I was a freaking real estate god. When that happens, God of the universe will swoop down and give you a nice little smack. Well, that was 2008. That's when I lost $50 million. And so, one of the things that I'm known for talking about and why my podcast has been so successful. In fact, we just broke 13 million downloads and had my 700th episode within the last 30 days, which is just mind blowing to me. But I'm known for talking about mindset and psychology. And, I've got students all over the country and they're also super successful because I incorporate this mindset and psychology conversation into my boot camps with my coaching and everything else. And in fact, let me brag for a minute. My students now own, I believe, in excess of 70,000 units. And I've only been teaching less than 5 years. And I'm super proud of that. But I mean, next to my kids, I think I'm most proud of that. But anyway, yeah, if you want to drill down on some of this, be happy to elaborate on some of these strategies.
Yeah. So you kind of talked about what got you into real estate investing. You saw the power for your mom.
Mm-hmm.
But then you had, would you say 2,000 houses at one point?
Yeah.
When did you?
No. 2000 over a period of time. In 2008, I had 800 houses. Okay. I had several apartment complexes and it was the houses that pulled me down. In fact, that's why I started my podcast to share that story. Let me explain how it happened. So I had 800 houses in Florida, and Florida has no state income tax. Property taxes are higher, which impacts what? Cash flow. I also had properties in wind and flood zones that have higher insurance, which impacts cash flow. In fact, my houses were 2 hours north of me, 2 hours south of me, and everywhere in between along the Gulf Coast of Florida. And what really killed me is these were C-class houses. Okay. You know, there's A, B, C, and D. D's the hood. Stay out of the hood. Trust me. Ask me how I know. But these were C-class houses. So, you know, they're older. It's a tougher demographic. They're harder on the properties. Okay. So lots of maintenance. And so if I had to send a maintenance guy to one of my apartment complexes, everything's the same. Appliance parts are the same. HVAC parts, the door locks, the windows, everything's the same. So you could stockpile parts and they're in and out in an hour. Well, if I had to send one to one of my houses and it's an hour and a half away one way, then they've got to go see what's wrong because every house is different, obviously. Then they, got to go find a Home Depot or a Lowe's where we have an account. And I don't know about you, Jordan, but when Rod tries to fix something, he ends up going to Home Depot more than once.
Oh, yeah.
And, that happens with maintenance guys as well. And so, what took an hour at one of my apartment complexes took all day at one of my 800 houses. So these things, even though I was only at a 30% loan to value, I was not over leveraged. Wow. They still did not cash flow well. Okay, but then the kind of the coup de grace, the final straw was I didn't pay attention to tenant demographics back then. Okay, I didn't care if they had a good job, they had good income, their credit wasn't complete crap, then I let them rent. Well, I discovered that I had a lot of people that were in the contracting business, plumbers, electricians, drywallers, painters, roofers, and that fell off a freaking cliff in 2008 and 9. They didn't have work. And so, and so it just imploded. But what's interesting is my portfolio actually dropped more than 70%. I went upside down. That's how far it dropped here. So it was kind of crazy. But here's the reason I started my podcast is my multifamily did just fine through all that. Yeah, it pulled back, but it would have easily survived. Except Rod, in his infinite wisdom, thought he could, save a little money and cross-collateralize packages of houses with my apartment complexes to save 50 basis points, 0.5% interest, thinking I was brilliant. And so the whole thing, imploded. And, like, for example, now we bought a 296 unit asset in San Antonio, really nice asset, been killing it. And I literally looked where every single person that rented there worked, and I gauged the recession resistance of that employment. And we could talk about recession in a minute, because I actually think the soup is going to hit the fan. I'm very bearish. I met with my, I also host a mastermind. It's the largest of its kind, I think. It's called the Multifamily Boardroom. And we met in Houston last week, and week before last. And there was a lot of discourse around this upcoming recession. And I was probably one of the more bearish people there. I really think it's going to be this is going to be a bigger crash than people think, and definitely going to see some pain with bridge debt, and we can drill down on that as well. But anyway, that's why I imploded back then, and that's why I started my podcast, was just to tell people, if you're going to buy and hold real estate, for God's sakes, do multifamily. Don't do single family. It's easier, it's quicker to scale, it's safer, on and on.
Sure. One thing before we move on to talking about that, because I do want to talk about, why not single family anymore? Why are you just doing multifamily? And you emphasize stay out of the hood. And I know so many people that just rave about, hey, I'm making so much money in the hood. Why do you say stay out of the hood?
Okay, well, listen, let me just put it to you like this, okay? I've had people killed in my properties, around my properties, behind my properties. I bought a block and they cut holes in the front door to pass the crack through. I bought on this same block, they blocked off the end of the street with concrete pillars to slow down the drug traffic. Not stop it, just slow it down a little bit, okay? You don't need that brain damage. I'm just telling you. You just don't need it. It's so much more work. It's not worth the extra cash flow. And there's no freaking exit strategy. Only bottom feeders are going to buy them. So why bother? Honestly, it's like, I may get some hate and political correctness pushback on this, and I don't care, honestly. Bottom line, I'm talking about making investments and not, and doing it prudently and carefully. And it's like, why go through that? And I learned the hard way. I mean, I did quite a few properties in very tough areas. I will tell you this, I bought houses in Memphis, 3-bedroom, 2-bath houses, 1,500 square feet for $1,500, $3,000, $5,000, $8,000. And I regret every single one of them because they were a nightmare. Okay. Life's too freaking short. So yes, you can go make some quick money there, but you're going to get pulled in. You're going to be engrossed in it. You're going to be stressed out by it. You're going to work a lot harder for it. And I'm just going to tell you, it's going to slow down your ability to scale. And when I tell you opportunity is coming, I hope you're listening, because it is absolutely coming right now if you're ready for it. I'll tell you how you can come to my boot camp later if you want. I've got one coming the end of July. But the bottom line is, if you're interested in this business at all, now is the time to get up to speed as fast as possible, because I really believe there's going to be exponential opportunity coming if you're ready. Like Warren Buffett says, be fearful when others are greedy. Well, the last few years, there's been a lot of greed and a lot of bridge debt and a lot of crazy deals done. We scratching our heads when we see what some of these properties trade for. There's no way they're going to be okay. But be greedy when others are fearful, and the fear is coming, and it's already started. And so, I'm rubbing my hands together. I'm in some cash right now. I'm excited about that. But if there was ever a time to learn multifamily, it's right now.
Love it. So on to my next question. So you lost all of that in 2008. You said the apartments got pulled down by the single family.
Right.
Actually, oddly enough, you have a very similar story to a friend of mine, and I'll talk about that later off air with you if you want to. But
okay.
The single family pulled down your apartments. It all got taken out. You lost $50 million. What did that look like, and how did you get back into real estate? Because I know people who lost it all in 2008, and it's not easy mentally.
Well, people killed themselves for losing less than I did proportionally, not just in 2008-9, but also in the Great Depression. You average out the value of the money back then. There were people jumping off buildings for losing less than I lost. So it's not easy. I mean, I thought I was set for life, honestly. And, and it was really rough, but this is really what I teach. And luckily, I was in an environment. So there are a lot of factors that come into play into how to get past something like this. And so the first thing is, if you come to my boot camp, the first thing we do is goal setting. I call it on steroids, okay, for the first hour and a half, because how the hell do you get anything if you don't know what it is? You got to know what it is you want with clarity and why you want it, because you've got to create what Napoleon Hill in his book, Think and Grow Rich, calls a burning desire, because you've got to be able to push through fear. You've got to be able to push through maybe limiting beliefs that you have. You've got to be able to get uncomfortable. When I immigrated this country, I was 6 years old. I got thrown into school, didn't speak English, found out what bullies were for the first time, got my butt kicked on a fairly consistent basis. Then my mom, proud Dutch woman that she is, thought it'd be a great idea to send me to school in wooden shoes and those leather shorts the Germans wear for Oktoberfest. Lederhosen. Got my ass kicked again. Then the bullies would chase me home, and she'd chase them off with a fly swatter, and she thought she was helping me. And so you can imagine what the next day was like with the bullies. And so I came up with this belief system that I wasn't good enough. I used to ask myself, how can I show them I'm good enough? And a lot of people have these limiting belief systems. And there's a reason the acronym for belief systems is BS, because 99.9% of them are, but they can really hold you back. And that's why this burning desire is so important. You got to really juice yourself to go take action and push through stuff like that. Maybe you're comfortable as well. And Jordan, we know the comfort zone's a nice warm place. We also know nothing freaking grows there, right? So, that's why, again, that's the first thing we do. So when this all happened in 2008, I reassociated with my goals. I got aligned with what I wanted and why I wanted it again, instead of focusing in the rearview mirror on what I lost. It's human nature to focus on the negative. And so that's the second piece, focus. Now, if you're watching or listening to Jordan here, you're a leader. And right now, the world needs leaders more than ever. We won't talk about the politics and the crap that's going on in the media right now. But if you're taking that stuff in, that's what gets bigger, because whatever you focus on gets larger, positive or negative. So focus is critically important as well. And then peer group is another one. And you cut me off anytime you want here. But, back then in 2008 and 9, I was in a mastermind. It was Tony Robbins' Platinum Partnership. And I mean, I host my own mastermind. I just mentioned that now because I believe in masterminds in a big way. But, that was like 130 grand back then. I think it's 3 times that now. But I was around people that were thriving through that crash. And they're like, oh, get up, you big puss, 50 million schmillion, get up and go make stuff happen. That's who you want to be around in what's coming. You want to be around people that are going to push you and validate you and be congratulatory when you do well. And I was talking about my students a minute ago. Most of those 70,000 doors were done between students, and, they're constantly praising each other and building together. And so, get around people that aren't going to be afraid of your dreams. Be very, what's sad is most people will default to a peer group they went to school with or that they work with, and they may, out of their fear or their jealousy or their fear of losing you or their fear of feeling like they may feel less than if you're successful, they may hold you back. So, and sometimes it's family. And so, love that family, but choose your peers proactively, because you show me your two best friends, I'll show you who you are in every aspect of your life, because you are who you hang out with. Yeah.
And we completely agree with that, or I completely agree with you there. So absolutely, you got to be around positive people. I think when things start to get hairy in the media, which they have been for the last however many years, cut that crap out, go watch positive things, be around positive people, listen to positive podcasts, and you'll absolutely be better off. And
I do a clip every week on my podcast called Own Your Power. And it's just about, that's 5 minutes. There's music. I'm really proud of them. I've got hundreds of them there. I hope you'll check it out. It's called Lifetime Cash Flow Through Real Estate Investing. And you give me, even if you're not interested in multifamily, you give me 5 minutes a week, I will juice you. Okay. I will get you going, get your butt up and go make, get you juiced. And that's why you need goals too. So that, you jump out of bed, you grind for a few years like most people won't, so you can live the rest of your life like most people can't. And that's why this stuff is so important.
Absolutely. And I think being passionate about what you're doing, because you've got these big goals that you're pursuing, makes life so much more enjoyable.
Well, not just that. If you've got these big goals, and the other piece is you want to play to your strengths as well, because multifamily specifically is a team sport, and there are lots of different hats that people can wear in this business. And if you are playing to your strengths, not only will you love it, and not only will you become good at it, but you will be passionate. You said passionate. You will be passionate about it. And you're going to have to influence people in this business. And if you're passionate, that influence is effortless, because people, they can sense it. They can see, hopefully you can feel a little bit of my passion on here. I love freaking love what I'm doing. And so, but people want to be around people that are passionate. And that's why playing to your strengths is another really critical piece. Some of the best, most successful partnerships I see in the multifamily space are someone that's analytical, that helps with the underwriting, along with someone that's super extroverted, that's building the relationships, investor relationships, broker relationships, so on and so forth. So, and there are lots of other hats that can be worn in the business as well, but that's a pretty common scenario that I see in my interviews.
So, I want to talk about, recession is the hot word right now. It very, very, very likely, they haven't said we're going through a recession yet, but
Bank of America said we're in a technical recession already. Yeah. They said it. And Powell said we are likely going to head into a recession. When the head of the Fed says it, I think it's fairly assumed that it's going to happen. So
exactly. But, can you give our listeners, because you've gone through a couple recessions, you come back from a really tough spot. Can you give our listeners some advice on how they can thrive and not just survive? So everybody's talking about, how do I survive this thing? Let's thrive.
Absolutely. Well, several things I just said: peer group, goals, focus, and listen. Some economists are saying this is going to be the greatest transfer of wealth we've seen in our lifetimes. Robert Kiyosaki says this is going to be a bigger crash than 2008. I mean, okay, so there are people, pretty knowledgeable people, saying that this is going to get ugly. And so, there are several things you can do to flourish. Okay. One, you got to get educated. If you haven't come to, let me throw my boot camp in there real quick, if you don't mind, Jordan. So I've got 3-day boot camp coming up in Denver. It's live. It's the only live event I do a year. And I'll tell you how you can come for $197. And it's not a sales pitch. It's 3 days of training. Okay. For $197. It is a no-brainer if you want to learn this business. And go to rodindenver.com or text my name Rod to 72345. Now the price is almost double that now, but if you use the code I'm going a little fast. I want to make sure you get this. So text Rod to 72345 and then use the code RODFRIEND as one word. And then you come for $197. Comes with some awesome bonuses as well. Bonuses are worth 10 times the $197. It comes with my document library, which I've spent tens of thousands of dollars on, and comes with my deal evaluator software that we use. So that comes with it. But listen, whether you come work with or train with me or not, get up to speed. That's the number one thing. I mean, my boot camp's kind of a no-brainer. It's really more about the time than the money. There's really inexpensive room blocks around there with the hotels and So, and Denver is United's hub, so you can fly nonstop from anywhere. But yeah, get up to speed, whether it's with me or not, get up to speed right away. Because if you're trying to learn this thing in the depths of this, it's going to be too late. You need to be building relationships now. You need to be building alliances now. You need to know how to underwrite deals now. I mean, you need to get up to speed as fast as you possibly can. And so, if you can't come to my boot camp, then get around other people that are doing this. Go to your local meetings. I know Austin's got some great groups you can sit down with and get up to speed. So that's number one, get up to speed. And listen, if you can't make my boot camp, I did my goal setting workshop on New Year's Day this year. I do it every year at the first for people, and I give it away and all that. And if you go to rodslinks.com, it's at the bottom, and it's with music. It's about an hour and 15 minutes. There's a guide you can download. So it's Rods Links plural, Rods plural, Links plural.com. It's my link tree. And let me, do this with your spouse, do this with your kids if they're over 10 years old, because, here's the sad thing, Jordan, people spend more time planning a freaking birthday party than they do designing their lives. This is designing your life. Okay. Mm-hmm. And my goal setting is not like anything you have done before. I promise you, it's very comprehensive. And so, do that if you can't make the boot camp, but get clear on what you want. You've got to have that burning desire. So you take action. So you push through fear, because there's going to be fear. The news is going to say, like they did in 08, 09, real estate's going to be terrible for 10 years. It's just a load of crap. But you got to be careful and moderate that in your own mind. Recognize that real estate's an incredibly stable investment. In fact, multifamily rents exceeded 2006 levels within 3 years of the crash. That's how fast it bounced back. Even this COVID blip, I thought this COVID could be the catalyst for the crash. And geez, I mean, we got hundreds of thousands of dollars in rent relief from our tenants that went out and applied for it. We helped them do it. Retail didn't get that. Office didn't get that. Warehouses didn't get that. So people need a place to live, and there's still a huge pent up demand. So. But anyway, those are the things I would do right away. Manage your focus, get aligned in on what you want, get educated as fast as you can. Because, again, in 2008, 2009, I was hiding under a rock for a little while, a eyeball poking out, licking my wounds. And if I hadn't been, I'd be on the back of my yacht right now, Jordan, because there was exponential money made back then. Mm-hmm. I'm not going to, I got crushed by that wave. I'm surfing this one, brother.
Yeah, love it. So speaking of getting crushed, and I think this is more of a hypothesis or a theory than anything, but there's a lot of people with bridge debt out there. And if really quickly, could you explain to our listeners that don't know what bridge debt is?
You bet. You bet. I'm actually working on a presentation for that literally right now. I just pulled it up on my computer. So nice. What is bridge debt? Bridge debt it's the hard money lending equivalent from single family in the commercial space. Okay. Yep. It's a wild west environment. Now there are some large players in it, but it's really there. If you buy an asset that's not stabilized, the reason it came about was if there was an asset that wasn't stabilized, and to get Freddie and Fannie debt, you have to be 90% occupied for 90 days. So let's say you got an asset that's only 70% occupied. So you would get bridge debt, be anywhere from 18 months to 24 months to 3 years. To get the property stabilized, and then you would look to refinance with conforming debt. Well, here's the problem. Okay. People were using it because they were getting higher loan to cost and higher loan to value these last 2 or 3 years. They were overusing it in a big way. Okay. And, like Freddie and Fannie had dropped their loan to value down to even 50% for a while. Now it's back up to about 65%. But bridge debt, you could get 75%, 70%. And so these guys were using this debt, but here's the problem. Very often they weren't getting caps. And now the bridge lenders are insisting on a rate cap, where like we were looking at a $44 million deal, and the rate cap, just to prevent the rate from going up more than 2 points, was $1 million. Okay. Oh, yeah. This is very recently. Now, there are a lot of these, and they're all adjustable rate. Okay. Now, so one problem is they may not have a rate cap, and the rate is adjusting, and it's killing their cash flow. Okay. So that's one issue. Second issue, they may have not estimated a higher interest rate on their takeout financing. And so they may not be able to meet their debt service coverage requirements to be able to refinance if they want to. Okay. Because they overpaid. I mean, I can tell you, we've bought that one asset in San Antonio last September. That's the only asset I've bought with my partner this last year. But we've been in best and final, like the auction process they have in this space where, the top 5 bids will get an opportunity to give their best and final offer. And we're like, they paid what? How could they? I mean, is their money free? Yeah. And so, I'm just telling you, those investors, and if you're a passive investor in one of those deals, I think you're going to have a reckoning. And I hate it. And I've had passive investors reach out to me, hey, I'm worried about this. And you should be, because I think deals are going to go south, and deals are going to go into receivership. And forget returns. I mean, the returns for many of these are going to be out the window, but hopefully they can conserve the actual capital investment. But and then, some of these operators, I'd get these offering memorandums. Like a slide deck from a prospective operator, and they would double the rents the first year. I'm like, really? No, that's not realistic. That's not going to happen. Or you'd see big rent increases every year for 5 years, like anywhere from 7 to 12%. That's not going to happen. Certainly not through this recession. Rents are going to stabilize. I promise you. And they've gone crazy these last couple of years. I mean, we've seen Austin, 25%? What did they do in 1 year? Insane numbers.
Yeah, no, but there's so much free money that's pumping that up too.
Right. Well, and so here's the other problem. The Fed has said they're going to do quantitative easing. What does that mean? So the Fed is the largest owner of CMBS debt for Fannie and Freddie. They have like $2.3 trillion worth of that debt. They have said they are going to become a net seller instead of a net buyer. When that happens, it's going to dry up that market. So I'm telling you, the biggest issue up to this point has been finding deals. Now the biggest issue is finding the money for deals. Like we've got, in the last week, we've put 2 deals under contract. And again, this is the first time in a year that we've done this, and they're screaming deals. I've got a small one in Hot Springs, Arkansas. It's only a $7 million deal. I'm paying $51,000 a door, less than $51,000 a door. And I mean, there's a Starbucks a mile away. To give you an idea, it's not like some hood. Okay. Yeah. And so, screaming deal, that's one. And then we just got another one in Nashville. Oh my God, gorgeous. And we're going to put long-term fixed rate debt on these assets, not adjustable rate debt. But these bridge guys, the guys that did bridge debt, there's going to be a reckoning, and there's going to be opportunity. And this is what I'm talking about here. And so, at the very least, that's going to happen. Okay. If it's worse than that, and I think it could be worse than that, there's going to be other deals that go south as well, because so many of these guys overpaid. Again, just there was that fervor. It felt like 2006 the last couple of years to me. So I don't know if I answered your question, but I really believe there's going to be opportunity.
No, you did, and if I say anything incorrectly, absolutely correct me. But so what Rod's talking about is people bought with adjustable rate debt, and they didn't have a cap on how high the interest rates could go, and then this
and they overpaid, so they were tight anyway. Okay, so very tight on and very. I'm sorry to interrupt, buddy. Apologize. They also, I so rarely see operating reserves as well. Like we do 6 months of freaking expenses minimum on a deal, minimum. Okay, and so they didn't do operating reserves. So again, sorry. Please continue.
No, absolutely. If people are trying to get deals done, and they were doing these really skinny deals, assuming the interest rates weren't going to go up like they have, and now
and that the rents were, and the rents aren't going to once this thing really gets ugly. I mean, look at the price of gas, look at inflation; it's insane. And so the rents have got to stabilize because people just flat out can't afford it. And so, all of that.
Well, and there's only so much that the Fed can do to get gas prices under control and things like that.
Now you said it all right there. Because honestly, I'm not sure interest rate increases are going to do that much for inflation. I'm really not. I think we're going to get into a stagflation situation where inflation continues, even though the rates have gone up. So the quantitative easing, that's another story. That could help. But those are the only 2 things in the Fed's tool belt. So that's why people like Kiyosaki, who wrote Rich Dad Poor Dad, are saying it's going to be bigger than 2008 and 9. And even if it's not that bad, I do think it's going to be worse than a lot of some of the, we were at this, like I said, my mastermind, there was about 6 billion represented by the members. And some of them think it's just going to be a blip. I don't. I think it's going to be bigger than a blip. So
either way, I think everybody's in agreement that something's going to be happening here in the next few years. And you are smart to be educated and be conservative when you're doing your underwriting or your deal analysis.
For sure.
So
stress testing the deal, like these deals that we're at, 65% occupied, they still break even. We're only doing 64, 65% debt on these things, not 70, 75%, super conservative, 6 months operating reserves, So by the way, if you're an accredited investor and you want to check us out, text the word partner to 72345. We haven't presented these deals yet, but they'll be coming on pretty soon. So that'll get you to our portal, and you can register and know about them because they'll subscribe fairly quickly. But yeah,
Sure,
fun stuff.
Kind of moving on from the doom and gloom. So if somebody's looking to get into investing, what is your recommendation there? I know you're all multifamily now. Do you say, hey, maybe start your first few small multifamily, single family, or is it jump straight to multi?
Very few people jump straight to big multifamily. Very few. 1 out of 50. Okay. I've had some of the largest operators on the planet on my show, 20,000 doors, 100,000 doors, tons of them with 6,000, 7,000 doors. And I try to always ask this question though. I try to ask them because I know what the answer is going to almost always be. And that is, if you could go back and tell 18-year-old self something, what might it be? And I ask it because I don't want them to hear it from me. I want them to hear it from these operators. And it's almost always go bigger, faster. So let me just say that. Okay. Now, if you're interested in getting into this business actively, then for God's sakes, come to Denver or get educated like right now. Do not wait. That's number one. Now, even if you're going to invest passively, I would encourage you to get educated, because why would you give your hard-earned money to someone if you don't understand it? Like, I got to tell you, I'm not kidding. I've been getting pinged by passive investors and other operators deals that are freaking out. Distributions have stopped already, things like that. And so, get educated so you can take a look at what they present and see, if they've got a clue what they're doing. And here's the other thing. Here's the other problem. Most of these big operators started in 2009, 10, and 11. Now, first of all, that's a clue. Okay. That's a clue for the crash, because they started in right after the crash, but they haven't gone through a crash. Okay. And it's been all gravy. And this rising market hides a lot of operational inexperience. Okay. Well, that's all coming to a head. It's all going to be all hands on deck. How do you keep your tenants in so you don't have turnover? How do you keep your occupancy up, and so on and so forth? And by God, you better run a tight ship. Otherwise, so there's going to be issues there as well, Jordan. Okay. That's coming. Okay. And so, there's a lot of things coming that I think are going to come to a head. And again, it's not all doom and gloom. With crisis comes opportunity. Just look at it like that. And that's how you should play this is the opportunities coming.
Absolutely. So, and I really want to get the question answered for people though is, hey, let's say I'm 21, 22, and I've got a little bit of money. Should I strive and try to buy that 75 or that 100 unit, or should I go buy that duplex?
Well, first of all, you can't do it by yourself. So you're going to need to align with someone else that's done it, and there'll be dozens of those in my boot camp, but regardless, get around people that have done it. Okay. And then, and see how you can add value to that team. Maybe it's finding the deals. Maybe it's raising money. Maybe you've got some project management or construction experience. You can help with the asset management. Maybe it's the analysis. Maybe you're super analytical and you can do the underwriting, but figure out how you can add value, playing to your strengths, not trying to build your weaknesses, play to your strengths, and get aligned with someone else that's doing it. That's what I would recommend. Okay. That my most successful students, my warriors, they're called. My most successful students are the ones that are most connected in the group, that connect with other warriors. That truly is the secret to success. Your net worth is absolutely your network in the multifamily business. Would you agree with me, Jordan?
I think in any business,
network. Yeah. It's definitely in the multifamily business. I'm just going to tell you.
Yeah.
I've seen it time and time again.
Yeah, no, I 100% agree with that. So get out there, network with people. You can't do it from behind your computer. You can't do it from a podcast.
Or if you're super introverted and you hate that and you're analytical, then you just got to go find a team that you can say, hey, let me help you underwrite your deals. Okay. And get up to speed on that. And of course we teach that at the boot camp, but get up to speed on underwriting. Just figure out where you can add the value and fit into a team, and you're off to the races. And maybe you only do 1 or 2 deals with that team, and then you go off on your own. But that's how everybody starts. Nobody starts this thing on their own. So, you know, and there's nothing wrong with going out and getting a 4-plex or a 6-unit, 8-unit, 10-unit. You can certainly do that on your own. But to go much larger than that, you're definitely going to be in a team.
And from experience, I would say probably you're going to want to keep that a short-term thing, buying that 6 or 8-plex, because the management is not fun on those.
They don't have great management companies for those size assets, and so you're gonna run into, you know, switching management companies, managing yourself. So it's consuming, and that's why, you know, if you can go larger quicker, you'll be glad you did. So
100% agree there. So what's next for you, Rod? You've done a lot. You've come back from losing a lot. You're running some awesome masterminds. You're running some awesome boot camps.
I love what I do, man. I mean, I don't know if you put these on YouTube, but there's some of the hundreds of thank you cards I get from my students. The whole wall behind me is covered behind my green screen, you know, and you know, it's just incredible to get the love that I get on a daily basis. And it's not ego, please know this, but when I tell you that I get, you know, DMs and emails and gifts and cards every single day, I'm not exaggerating. And sometimes as many as 10 a day, you know, from people whose lives have been impacted by my work. And you know, I'm sure you get a lot of feedback as well for your podcast. And it's just awesome. And so, you know, next for me is just to continue what I'm doing, and I truly do love it. I mean, hopefully you can tell from the passion that I talk about. I don't get rich from your $197 freaking boot camp ticket. Okay. Trust me, I make a whole lot more money buying one asset. But I love it. And I love the, you know, connectivity of it. You know, we had 800 people in Orlando in December, and we're expecting not quite that many in Denver. I'd hoped for that many, but I think a lot of people are starting to fear up again, which is just so sad because, you know, so much opportunity is coming. I just know it, and exponential opportunity. And that's why, you know, I'm kind of passionate about this, because again, I missed out in 08 and 09. And I'm excited this time because, you know, I know there's going to be deals. I just know it.
Yeah. And there always is, but whenever there's some pain and fear and uncertainty, absolutely, I think you've got a better chance of finding a good deal. Rod, what is your favorite business or mindset book that you like to recommend to maybe your students?
Well, my love language is gifts. Okay. So my students get lots of gifts. And one of them is the book, The 5 Love Languages. If you haven't read that, get it. I had the author on my show. You know, so some of the books that I gift are that one, Hal Elrod's Miracle Morning. I had him on the show.
Yeah.
The Gary Keller's One Thing, had Jay Papasan on my show that co-wrote that. That's a great book. The Slight Edge is a great book. Another book I gift them is The Turning Pro. You know, stop being an amateur and become a professional. So those are some of the books that I gift my students. You know, Never Split the Difference. Chris Voss, had him on the show, the FBI hostage negotiator. There's some good ones.
Great ones. Yeah. And, you know, we'll put all these in the show notes here, but those are all great books. The Miracle Morning, absolutely, for anybody, no matter what business you're in, just starting off your day in a good mindset and in a good spot is going to lead to more success throughout the day.
Yeah. He's a beautiful guy too. I mean, his life story, Hal's life story is incredible. Yeah, that's definitely a great book.
Yeah. Love it. So much in that book. There's so many versions of it too, where it can speak to you individually.
Right.
So, Rod, how can people get a hold of you? Of course, you've got your conference.
The boot camp, you know, obviously, the boot camp is awesome. Text Rod to 72345, and just remember the code RODFRIEND to get that price, and 197. And it's not a sales pitch. I talk about my coaching. If you want my coaching, for about 30 minutes, okay, on one day. The rest of it's all full-on training. So text Rod, remember RodFriend. Go to rodslinks.com. Oops, sorry. Go to rodslinks.com, and there's tons of free books there. There's videos there. There's that goal setting workshop that's at the bottom. So there's a lot of free resources there, but my website is Real Estate with Rod as well. So you can go there too. But that's enough. My podcast, obviously, Lifetime Cash Flow. I hope you'll check it out. I'm really proud of the work we do there, and just a lot of awesome interviews.
Love it. Absolutely. And we'll have all this stuff for everybody in the show notes. So absolutely reach out to Rod, go to Rod's boot camp, Rod in Denver, and then Lifetime Cash Flow is absolutely a podcast you should check out. Rod, thank you so much for coming on here today. Had a great time.
It's my pleasure, brother.
You. And I think
likewise, buddy.
Very motivational for our listeners to hear this.
Thanks, bud.
All right. Have a great day, Rod.
No, I appreciate it, buddy. Thank you.